Okay, let's restart this. Gotta go back through all this again. Sorry everyone. Gonna go through these once more. I just disconnected, so I'm hoping it doesn't do this to me again. But let's go ahead and get started. So, all right, part 2. Back to our charts, and we'll try and see if we can get back to our charts here. Hey, what's up, Kirk? How you doing, buddy? Good to see you. We love you. Awesome. No, I appreciate the love. All right, so from a monthly perspective, let's hope I don't get disconnected again here. So monthly perspective, we do still see that we've had a green month. Can we expand further? Absolutely. Is it likely to expand further? Questionable. I would like to see if dollar's going to expand higher. I'd like to see us go up maybe the Monday, and then see how and where we get to in with respect to this week's wick. So I would take this low to this high here, and I would take 18,641. I'm going to mark that out as a potential area for a consequent encroachment of that wick. So I think that's going to be our initial draw for the week. And then once we hit that, we'll have to see if dollar continues to remain bullish. Then, so if we see dollar continue to remain bullish, I'll have to see if it reaches up to this point here and then rejects to head lower, or rejects this inversion fair value gap once more to head lower. Or if it continues to head higher, then we'll see stocks head lower on that. But that's the first level that I would put on my charts to watch out for on the weekly perspective. So I think that it can reach up to here, and then we need to see what it tries to do from there. Do I think it's more than likely to reach down to maybe this weekly bullish order block? Or actually, it's technically this is a propulsion block here. So I think that if dollar decides to reach up and reject that inversion fair value gap again, we're gonna head higher on stocks. And that's going to be a really interesting lead into April. Don't know if we're going to get that, but that is, we've created all-time highs. We continue to create all-time highs, but we're starting to see more and more sell-offs come into play. So just depending on what happens, if we do get a displacement, and what's going to be really interesting about this one is that we have actually formed a higher short-term low here. So remember, we were talking about this many weeks ago. We were hoping that this would close a little bit below here, and then the following week would close above. Well, we didn't get that week, but we did get it this week. So we have this key short-term low here that we want to potentially, we're seeing higher lows, higher highs, higher lows, higher highs. So while we don't think that we're going to reach this, if we do reach that and we end up having a bearish April, that's going to be really bad for the month of April. Generally, April is a bullish month, so we'll have to see if we can continue this trend and see if we can keep squeezing shorts out. So, cool. So that's on the weekly chart. On the daily chart. So here we see that we had that really nice big movement up on FOMC and took out buy side liquidity here. So here we are looking, we saw a movement down into this area, but we didn't see true displacement lower. In fact, it actually got bought up a little bit, and it's currently heading higher from where we started the week. So it's going to be interesting to see what happens this week. I think that because this was protected really, really closely, if we see the daily chart head upwards first and fail to get really high, much higher than this, like maybe it takes this buy side liquidity out and then reverses here, that could be an option where then it displaces lower. So maybe it heads, oh, what the heck? So maybe this first heads up to this area, peaks up above it, and then we start to see, wish I could make this not look as blocky. All right, here we go. So you end up seeing something like this, and then you see a big movement lower below this. That displacement, I think, is going to be key. I think we'll get maybe something like this if we do. Something like that. This IPTA day high is going to be really interesting to see if that does happen. But thing is though, we saw this get supported really, really, very much so. Like people did not want this to be traded below. So we have all these people that went short here. This is a mitigation block here, right? Everyone went short here. Low, high, lower, low, higher, high, back down to a mitigation block, and it's come back up. So this whole area, prices traded very much so. A lot of trading in this area. So these generally are becoming balanced price ranges where it doesn't need to go any further. And if it is going to go further, it's going to be a big player ripping through all of that there. So I'm not looking for us to take this out, but if we are bullish, I would prefer that we end up coming down into at least the discount area of this fair value gap. Maybe we drop down to this short-term high and then we head higher. That would need to be coupled with dollar going up for, and let's pull that over again, dollar going up for that weekly high there. And let's look at the daily chart. So dollar, we would expect to go up for these daily highs, take that out, and then start to retrace a bit. So bearish dollar, bullish indices. So that's what I'm looking for this week. If that doesn't play out for some reason, and we start to see dollar just continue to rise and rise and rise, well, that's not going to bode well for indices to go any higher. In fact, we'll have to see if one, it's decoupled and indices continue to rise with dollar, or two, if dollar continues to rise and we just see a sell-off in the last month of March. Maybe we start to target not only this buy side imbalance, but also this bullish order block here, and maybe even that Wicks consequent encroachment followed by the previous new week opening gap. Those are all three areas that I'm looking at right now. So that kind of shows you how we map out the relationship between dollar and where indices might go this week. We don't have to go too far lower into the lower time frames because those are the time frames we'll use to actually trade. But as you can see on the 4-hour, this is a balanced price range, and we started to get displacement above it. Because we have displacement above it and what seems to be institutional order flow entry drill, I would favor, if we are bullish, a movement down to this halfway point and then we head higher. If we're bearish, I'd favor a movement up here before we head lower. So lots of if-else type statements, right? If we take a look at ES as well, so we're going to take a look at this on a higher time frame. So ES looks really similar, right? Monthly's gone up above all-time highs. It has an area here to potentially come back down to. If we are very bullish, it'll continue to rise. And we also see that on a weekly perspective. We traded down to this bullish order block, moved higher. This turned into a propulsion block, and we've headed higher. So I would like a movement lower at some point this week down to this area here, maybe the midpoint of it, but or 25% mark of it, and then I expect us to continue to drive higher. They didn't say that they were, the Fed didn't say they were lowering rates, but they also didn't say they were hiking rates at all. So same status quo means market's going to be indecisive. Let's see. There's also, Robert Mathers says, there's also a interesting volume imbalance on dollar, Feb 14th through 15th, before the highs you mentioned. What time frame are you talking about? Oh, you're talking about on the daily chart here? That one here? Yeah. I could absolutely see us adding to this as a potential draw on liquidity. I think if we hit this, that yes, we could certainly reject off of that, but these relative equal highs serves as a really nice pool of liquidity. So if we head to here, there's a small chance we just continue higher and break that high before we head lower back to this down close candle potentially. Yep. So yeah, so lots of good draws to the upside. Yes, we do have some buy side imbalance here. Yes, we could trade down on dollar first and then head higher, which would be, you know, down on dollar first would make a lot of sense for this week, because then you would have that manipulation lower on dollar, meaning indices begin the week heading up maybe on Monday. And then if we start to see us head down to this bullish order block, that's where I would look for dollar going long to target this relative equal high, and of course where we would see equities drop. So yeah, all good draws on liquidity. They support that frame of trade, and we do see that ES again, same direction here. It's beginning its trek upwards, but it could you know, head lower, and it could only head as low as these two down close candles. What'll be really telling is if you get displacement below all of this here. That's what really needs to be tested, because on the daily chart for ES, you can kind of see how we've just continued to stair step up the whole time, right? Each day. So we do have room to head lower for sure. But watch this daily bullish order block and balanced price range, right? This, I think, is going to help us head higher, but we would need to see dollar head lower to support that. Dollar has been a little bit decoupled lately than indices, because if you take a look at this here, below on the lower chart, you see dollar, and you can kind of see how they're slightly, you know, it's heading higher, and it's heading higher and heading lower on indices behind us. It's kind of weird, like green, 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 and then one red day. So we had one red day and then 2 green days to end. So dollar's slightly decoupled right now, not great. And then you see the Dow as well, right? So the Dow on the weekly, it has continued to make all-time highs, of course, and we now have this whole string of down close candles, which if we are very bullish, we will not see it go below this weekly volume imbalance here. So we're going to watch this weekly volume imbalance on the Dow this week. We're going to see if the weekly on ES heads downwards to this bullish order block and then supports it there. And then, of course, on NASDAQ behind us, bring this chart over. So on NASDAQ behind us, we are going to look to see if it heads down into this bullish breaker, or sorry, bullish order block. So from a higher time frame perspective, dollar maybe rises a bit and then falls and supports a heavy movement higher. Dollar continues to rise the first part of the week. We get a real nice retracement down into below equilibrium, into a discount range before we then head higher. Those are really the plays that I'm looking at right now. Dollar higher, equities lower, and then dollar lower while equities head higher after sometime midweek, right? So that's it for this weekly prep, really. I don't see anything too crazy out there on the real-time hour charts. We'll have to see where Monday opens up, but yeah, Friday was a difficult day to trade sometimes. We knew that there's a high probability of it dropping on Friday, but in fact, there were quite a bit of buys on Friday as well. So definitely still weary of shorting too early, but as you can kind of see here, every time there's been a turtle soup, it's a run on buy stops, there's always been some coupled movement into the external range liquidity that it could potentially head to, right? Oh man, so I'm kind of losing my voice here, so I think I'm gonna have to cut it a little bit short. But yeah, I see that with dollar rising, I would see us heading lower first. If dollar continues to rise, if it rejects like it is right now, right now it's technically rejecting, then prices are gonna head up. If we break up and over this all-time high, I would expect the unemployment claims to either head like spike higher to spike early shorts out, or to completely obliterate anyone who went long late. So again, consolidation is the name of the game. Watch for turtle soups. Johnny, do you see the March 12th daily candle as a bullish breaker? Okay, let me make sure I have this correct, because I know on TradingView is a little bit different. Let me pull this up. Okay, so this green candle is my March 12th candle. And on TradingView, this green candle is our daily candle. As a bullish breaker. Typically, no. It did take out a liquidity pool, though, and higher time frame bias is bullish still. We are in an enormous premium, but we haven't seen evidence that we're going to head lower anytime soon. So, yes, I do see that as a bullish breaker, but typically bullish breakers can occur when they're a little more higher probability when they're in a severe discount, which in this dealing range, technically it did trade down into a discount. You see optimal trade entry right here, optimal trade entry, and it headed higher. So yes, I think this could be treated as a bullish breaker, but it's possible that that breaker already occurred and got tagged in this previous week, right? So that is something that it's good for its current dealing range, but you need to be aware that we're still in a pretty balanced price range here, and we haven't broken out yet. Yes, we do have a little bit of room for people to wick upwards, so that gives the green light for the potential for people to continue to take out buy-side liquidity if the trend is still in that direction, right? So treat it as you may. I personally am not going to look at that like a breaker, but I'm not going to put a ton of emphasis of entering on that breaker. Let's put it that way. Yes, it could. Yes, it is a balanced price range, so does price need to head any lower than that? No. But it is the last week of March, so that's what I'm considering right now. So just rips higher in the new week. Very possible. It's very possible, yeah. We did have a little bit of a movement lower on the day, so that potentially could be the low of the week within this balanced price range. But we are in the month of March in this overall dealing range now. So I would prefer a movement down into equilibrium before heading higher. LP trades, total soups. Yep, absolutely. Total soups are incredible to trade during consolidations. Now, you will get stopped out of these at some point. At some point, it's going to break above this and maybe continue heading higher, and you'll get caught with your pants down if you don't have a stop loss. But important thing there is stop trying to guess the top at the end of the day. We don't have displacement lower yet. Maybe we get it this week, but we don't have it yet. So we're not going to try to anticipate the top. We're going to assume it's going to continue higher until we see evidence otherwise. That's really the name of the game. So, watch this week. Watch the midpoint of this gap here. Right? So watch the midpoint of that gap there. And I think there's even a slight volume imbalance down here too. So I like that is also close to the 20-day, 40-day, 60-day if the high. So I'm going to be watching this segment to be filled this week. If this turns into an institutional order flow entry drill, then we'll look for this target to get targeted. And of course, the weekly wicks midpoint there. So be careful trading on Thursday this week. That's one of the biggest days to trade. And look to see if we get a movement on dollar that is lower for the first part of the week and then higher to take out those highs. That would support us going lower on a day, or at least at the beginning of the week, right? Going lower first, having prices go higher, maybe tag out this high, and then have our dollar index continue to head higher and drop us out from there. That's what I think is going to happen, but we'll see. The biggest economic release this week is core PCE on Friday. I actually believe that the biggest economic release is unemployment claims on Thursday. Core PCE is also important, but unemployment claims can be very volatile as well. So both of those are going to be really, really juicy, I think. Hope we're not dealing with consolidation Monday through Thursday. I mean, there's enough calendar events here that you'll probably get some decent moves, but I mean, if you get consolidation, then you can probably look for internal range liquidity to external range liquidity type trades. You should be able to find them on lower time frames. Maybe 1 hour. So like this whole week was pretty much a combination of internal range to the external range liquidity, right? So once we established this dealing range here, people traded down. This took out external range liquidity. We traded up to internal range. We traded up to internal range. We traded down to internal range liquidity before heading higher and heading for external range liquidity up here. Taking that, heading down to internal range liquidity, knew that there's a nice liquidity pool up here, traded upwards, took that out, external range liquidity taken, trading now lower, external range to external range, got taken there. We trade back up into internal range liquidity, which is this SIBI. We sell off from there, price trades back up into internal range liquidity, price sells off there. This one didn't quite make it all the way up there for whatever reason and dropped out. Took out all these external range liquidities. Now it heads back up to an internal range liquidity, takes out an external range liquidity here. Heads to a higher internal range liquidity, but it was really small. So they took those orders, headed lower into a area of imbalance, and continued to head higher to head to external range liquidity. So in consolidations, looking for turtle soups are kind of key. So if you aren't familiar with that skill, don't worry about it. You can still find some lower time frame setups that follow whichever model you're following at the time. So, all right, ladies and gentlemen, I am getting. I need to get a few other things done, get prepped for the week and the day tomorrow. So, I'm gonna cut the stream short for today. You know where my bias is. I know that we have in the month of March continued consolidation. I'm leaning for us forward to have dollar head higher in the beginning of the week. So that's my bias. And then if it sharply rejects, we're looking for two situations here for this to head higher and reject later, either to the midpoint of this weekly candle, that volume imbalance, or this rejection block here, or this liquidity pool before heading lower. So we're expecting this monthly inversion fair value gap to fail, essentially. If it fails, then we have dollar going lower, indices heading higher. If it succeeds, we will be very careful with that because we don't know which way dollar is going to move then. Let's see. We're not winning. We consolidation Monday through Thursday. Yeah, I don't think we're going to have consolidation Monday through Thursday. I think we'll get some clear high or low of week either by Tuesday, maybe by Wednesday maximum. So trading for science, what's your winning percentage at? Right now, in the past few weeks, it's somewhere in the 60 to 80% range. I just have been really, really fortunate. I did have a couple of red trades at the end of the week on one of my accounts, but the other accounts were up quite a bit. So yeah, it's I don't take a lot of trades each week either. I mean, I can't. So I used to try trading every day. It was really difficult. And right now I look to just keep adding to my green piles on the performance accounts and slowly get those up and running. So I'm hoping in April, if April turns out pretty good, I'm hoping to get the first 50K account over to an area where I can start to draw some cash out of that one account, and we'll continue to build on the 150Ks as well. So I'm excited about the 150Ks because that truly does allow you to really gain a lot of leverage after you've reached the point. Because my strategy, I'm considering not taking anything out until I reach about twice the trailing drawdown. So trailing drawdown plus $100 is when it stops trailing you on the performance accounts. So let's say on the 50K account, you get your account to $50,100. After that point, it stops trailing. So if you were to get 2,500 like above that, so $52,600, you're now able to risk twice as many micros as you would back when you were trading 1 or 2% on 2,500 drawdown when you just gained a fresh new $50,000 account. Has it been easy? No, but what's great about trading 1 to 2% is that your losses keep you in the game. If you're following proper risk management, and this is the one thing that has saved my performance accounts greatly from just going off the deep end, right? If you aren't following the risk parameters of, hey, when you take a loss, let's say you're trading 10 contracts. It's an easy, even number. I'll use this for example, right? Let's say you're trading 10 micro contracts and you take a loss, 10 point, however many handles is your risk percentage. It probably shouldn't be 10 contracts if you're not used to it yet. But let's say you take your loss. Let's say it's 10 handles. You take that loss. And you're like, okay, I got stopped out of that trade. I think the direction's still right. I'm going to wait for my next trade. Next trade has to be 5 contracts, just so you don't lose the exact same amount that you did the first trade. And so what you do is you try to trade those 5 contracts. If you're truly in the right direction, you'll know because that trade moves really quickly in your direction. If that does happen, then you'll still end up recapturing over 50% of your loss quickly there, and then some. So once you do that, then you can go back up to your 10 contracts, but only if you retain 50% of your previous loss, right? So if you lose on that second trade, you get one more trade where you half the risk again. So now you're, instead of 10 contracts, you're down to 5. Instead of 5 contracts, you're down to 2 or 3, right? So 2 or 3 contracts now. This is where it gets really tough because you lost a decent chunk compared to what you've usually been used to, right? So you're probably thinking, man, like, I thought I saw the bias, I thought I saw the direction, but I got stopped out twice, right? So that's when you really, really need to just hold off, wait until the afternoon session if you've been trading the morning session, or whichever session you've been trading before. That's when you need to just stop, look for a clean trade, and wait for that to come to you, right? Because then, even with a full trade on those 2 or 3 contracts, as long as you make back half of what you lost when you went down to 5 contracts, you're able to then move back up to 5 contracts for your following trade, make back half of what you lost the first time, and then continue building your equity curve that way. It doesn't take very long to do that, but if you can do that, you really lower your equity drawdown curve, and it's really helpful to do that. Trading for science, congratulations on your success. Thank you, but I'm constantly learning every day. This is one of the most difficult puzzling games, and not being able to really dive into it and fully immerse myself every single day and study the charts. It's difficult. I mean, with a full-time job, it is very, very difficult. I'm not going to deny that. It's really tough. I don't wish this upon anyone, but if you really want it enough and you really enjoy it, then you're going to be something like me where you're constantly trying, you're constantly journaling, constantly studying. And yeah, it's tough, but very rewarding, right? So let's see. So Robert Mathers says, will you try to beat ICT's 2024 record in the Robbins Cup next year? I would love to. I'm not that good yet, though. I'm good, but I'm not that good. There's a lot of stuff to study and a lot of stuff to really commit to muscle memory. So I'm not the best ICT trader out there. I have been able to have really, really good trades, really, really logical, like XYZ happened, bias was this direction, this lined up, these confluences, and it, clicked. Having more of those than not those. So I'm starting to get there, but there's no way. If he actually succeeds, and it's going to be a really big thing if he does beat Larry Williams' record. But I think that's something that all of us can strive for eventually. But do you need to beat Larry Williams' record just to be a successful trader? I don't think so. Like, I think most people, okay, so I think that most people can be, like, if you do the calculations, I'll pull up a calculator and do this real quick. I just need to get some water here because I was talking too much. So I think that when you take a look at how much 252 trading days comes out into a year, let's say you only made $500, that's already 6 figures, which then you get taxed on, kind of sucks, right? But, you probably retain 70, 80 grand of that. That's huge. If you can make $500 a day trading each and every 252 days of the year, that's a very honorable thing, and that would be enormous for many people. Let's say you made half that. So 252 times $250 a day. That's still 63 grand a day. Like, you probably retain 40, 45 grand of that, right? So you could probably still have plenty to work with. You could invest that. You could do a lot of stuff with that money in the meantime, right? Could you survive on that yet? Yes, if you lived very, very frugally. But the problem is when you start living very frugally, you don't have a lot of like, emergency funds. It becomes really difficult to do that. So, um, I'm gonna strive for $400 to $500, roughly. I mean, if I get $60 a day, I'm happy, right? Like, if it's within my 1% risk for the 50K accounts, right? So, just really depends on what your life circumstances are and what you're ready to accept in terms of risks. Trading for science. Do you do live trades? I have shown some live trades. I don't do it every single day, but I have shown live trades. Like, you can go look back on Friday. I think I showed one on Friday. I showed one Friday last week as well. Yeah, I think this Friday's was maybe just a 17 handle one, but I think the previous Friday one was maybe, gosh, what was that? Oh, it must have been, was it March 15th? Let me see. Let me see if this is, yeah, I think this was it. Let me see if I can find it. Here it goes. So March 15th, you can go back to around the 2 hour and 20 mark, and you'll see me talk. I'm not talking on because I'm working, right? So I can't really take a trade technically, but you can see me end up, and I don't know if you can actually see this, but you can see this trade ends up going to down to this level, which I called out earlier in chat, and I called it out over here at the beginning of the day, right? So you can see this happen, and I call that out. I have my levels there. I let this trade all the way down. Eventually, let me fast forward a little bit. We see this get over to, this ends up being about 142 handles, I believe, of a trade, and that was live, right? So me trading live, that's kind of less important. Yes, I do it on occasion. I don't do it all the time, but I definitely do show examples of that, and I will always have what I think is going to happen that day during the pre-market analysis on Wednesdays and Fridays when I do come live. So I've had to abridge my schedule, so I'm trading Wednesdays and Fridays only. So LP Trades, congratulations. Thank you, brother. Appreciate that. Robert Mathers, I've had to reduce down to 1 micro because of drawdown. Even 1 micro on the right trade can make you back a huge chunk on your losses. Yeah, exactly. So, Robert, that Friday the 15th trade, that was 2 micros that I traded, and that second micro netted like $300 or $260 or something like that. Does that happen all the time? No. Could you have made more if you had a ton more contracts? Yeah. But those 50K accounts, you can only risk 1 or 2 micros if you want to risk 1 or 2%. The growth on them, if you're a good trader, you can still gain 100, 200 bucks every single time with 1 or 2 micros. 2 micros is a little bit easier to get to that $100 mark, but very, very possible to meet the minimum threshold of those Apex of the Apex prop firms to get past the trailing drawdown, right? Even they can make back a huge chunk of your losses. Absolutely. Trading for Science says, I'm the same. I study the chart every day. I try to study at least 5 to 6 hours a day. I do have a part-time job too. Cool. Yeah, that's awesome. Yeah, I was putting in a ton of hours in the early stages when I was really studying ICT hardcore. I still go back and review some lessons from time to time, but I'm needing it less and less so because I've spent so many hours with it now. I can do it and see it on my own now. Do I miss stuff? Yes, but it's a learning process. You're not going to see everything perfectly every single time. Robert Mathers at Trade for Science, keep it up. You'll meet your goals with that dedication. Yes, absolutely. Did you watch ICT's 1440 video on Robert Mathers says? Yeah, that's a good one too. Trading for science doesn't follow ICT. I do my own style trading. I've been trading for about 6 years. I've blown a lot of accounts. I fully understand. It is difficult. Yeah, it's a tough one, but if you know you're meant for this, though, you know you're meant for this. Like, you know you're excited to do it. You're excited to stay disciplined. You're excited when you learn. You're excited when you get better. So, really, really good stuff there. All right. Well, so keep an eye on this all-time high as well. So be wary of that. We barely breached above here, so be careful. If it could continue higher, but you need to see dollar show resistance, and if dollar continues to go higher this week, like we think it will, we will be aiming for this whole area of imbalance that needs to be rebalanced first. Okay. Okay. Yeah, I don't think ICT is risking 25% of his account. But yeah, I mean, absolutely. It can feel like a lot for sure. 2% keeps you in the game though. It gives you 50 trades, essentially 50 trades before you blow your account, and that's a lot of trades. It's a lot of trades for you to wait for a 3-to-1 risk trade, right? So yeah, so I think that's risk management and self analysis is kind of like key. If you don't know your tendencies, you don't know your gambling tendencies, you don't know your risk parameters, you don't know what you're willing to risk, what your risk tolerance is, you're gonna blow some counts, right? So you just have to be careful with all that. Really write down and jot down what you are willing to risk. How much pain are you willing to endure monetarily, psychologically? How much are you willing to learn about yourself, right? And once you figure that out, you'll start to see you become far more effective of a trader. So yeah, have a good one. Robert Matthews says, have a good week trading next week. You as well. I'm gonna close the stream now though, because I need to get ready for bed and start the wind down process. And yep. So good luck this week. I won't be with you until Wednesday and Friday, but I will be dropping notes on what I see in the community. So take care, everybody. Have a good week trading. Stay safe out there, trade safe, and make sure you stay hydrated. See you later. Peace.